Clearwater spun out of Potlatch in late 2008, and it was the paperboard and tissue manufacturing assets that were spun out to form Clearwater Paper. We're about a $2 billion company in terms of revenue. About 60% of the revenue is on the tissue side and about 40% on the paperboard side. So I'll just kind of stop there. And
okay. I think many investors, at least as of recently, have been more focused on the tissue side. You've now grown to be one of the largest private label tissue producers in North America. And you recently brought on some capacity and done a stunning job at placing that capacity. However, as there's a significant amount of tissue still slated to come on in the North American market at a pretty steady pace through 2016. What are you seeing in the market in the form of pricing and uptake of that new capacity? And are you having any trouble keeping sold out as that new capacity comes online?
Well, we got to being sold out with the Shelby tissue mill here in the third quarter. And as I look forward from here into 15, I don't really have too many concerns about keeping that sold out. To go back, that capacity came online in the late 12, early 13 time frame, along with several other of our peers and competitors. Mm-hmm. That made 13 in the first part of 14 a little bit choppy. And we did go through bidding processes with all of our major customers through that time frame. We did retain all of that business, but as you can imagine, in that context and going through that process, you do get some pricing pressure, which we saw. Mm-hmm. So the capacity as we look forward at this point is just announced. And like I said, as I look through 15, I think we're kind of now in a more of a balanced supply-demand kind of market. Mm-hmm. Now, if all of this announced capacity were to come online, I think in 16 you probably could end up with a little bit more of a choppy type market like we saw in 13. Mm-hmm. Not to say it's not a healthy market, but a little choppier than we'd like.
When you look at the whole private label, proposition for a retailer, with you all having TAD quality and I guess some of the other private label guys having that, what keeps the big retailers from trying to do more business with people like you, where I would assume they make more of a profit, than they do selling to branded guys. I mean, that's my perception because you go into a store and usually tissue is in farther back in the store, so they wouldn't even walk past, what they make more money on. So it just seemed like, up till now, we always thought of away from home tissue was like sandpaper, but now you've got CAD quality that's yep. equivalent or close to it. So what are are those assumptions fairly valid, especially about the profitability of selling your products as opposed to big guys?
Yeah, I think the retailer does better selling their store brand versus the brands. And you would think, especially with something like tissue paper, that it would be a prime candidate to be widely received from consumers as a private label product. If you look at Europe, and you look at bathroom tissue and paper towel, market share for private label, it's about 60%. In the U.S., you're looking at, bathroom tissue is mid to low 20s and paper towels are 30%. So on the surface, it looks like, geez, you can kind of see what the opportunity might be. I think there are structural and consumer differences between Europe and the United States that would lead to that not just automatically happening over a very quick period of time. I think you'd have to probably see some consolidation within the retailers to balance the retailer-supplier balance of power. And, the U.S. consumer is more brand-oriented than the European consumer, and so that would have to shift over time. But, I mean, definitely, the retailer makes more money, and you would think the consumer would shift towards private labels, so those are all positive things. I think one of the things we've seen over the last 18 months is that the brands, once we and others had, basically a Charmin quality answer for private label, they weren't necessarily just going to sit back and let market share slip away. So starting in about August of last year, we really saw a huge uptick in promotional activity from the brands. When we first saw it, we thought, okay, this is going to be a month, it's going to be temporary. We got to the end of the year, it was still going on, it's still going on today. So that was a pretty good headwind that we were dealing with in kind of the shipment launch of our Shelby mill. We initially had planned to be sold out of our Shelby mill in December of 13, and it didn't happen here until the third quarter of 14. And I think the primary reason for that was having to deal with the promotional activity from the brands, because for us, what we need to have is for the customer to try our product, to have trial. And then once they try it and they think, okay, this is just as good and it costs less, that's what they buy from then on. But if they come in the store and look on the shelf and Charmin is the same as the store brand from a price standpoint, the typical American consumer will pick the Charmin. They usually aren't buying just a week's supply, so they're not back in the store for a month or two. And so that really kind of delayed our shipment launch.
I mean, do you see any need for Clearwater to, there's obviously a lot of announcements out there, and you're now running full. Do you see any need for Clearwater to expand organically their tissue capacity, or would you see any opportunity in the future to expand your tissue capacity through acquisitions?
So the first part of the question, we're not going to go build a paper machine just to, have the capacity or an answer to someone else's announcement. So to the extent that we see growth in our order book and incremental demand where we have a line of sight as it relates to, being able to find a home for incremental capacity on a new machine, we would do that. Mm-hmm. I think the bigger opportunity for, call it growth for us over the near term is less about the top line than it is about margin percentage and margin dollars, particularly on the tissue side of the business. Mm-hmm. And our focus really is on both some, capital projects as well as some elbow grease to, we've got a model in the tissue business to be at 17% EBITDA. We're kind of running around between 10 and 12%. And we're looking at some projects that we think, give us line of sight to say 4 of those percentage points.
Switching to your other business, bleach board. Bleach board operating rates, by our estimates, are well into the upper 90%. And do you agree with that? Yet, according to RISI, the latest round of pricing increases, except maybe in cups a little bit, struggled to go through. Why do you think there's been so much resistance in the market, and what do you believe needs to happen to get further pricing in the bleach board grades, given that high operating rate?
Yeah, so I'd agree to the first part of your question that we see operating rates through kind of year to date around 96%. Mm-hmm. As it relates to the price increase, now you got to put it in context. This is the 3rd price increase in SBS in the last year. The first 2 of which, kind of came through with their full announced price increase of $50. This one was a $50 price increase. Mm-hmm. We are actually, we saw that price increase go in across all the segments. So that's a little bit different than what we heard from RISI. And I would guess, we're a little perplexed by that, and I guess some of our peers and competitors might be as well. It didn't go, it's not going through at the full 50. And I think, so this one has struggled relative to the other 2. Mm-hmm. And so 1, it's the 3rd one in a year. 2, the timing of the price increase was as we were pretty much coming into a seasonally down quarter, so not ideal there. So I think that's what's kind of contributed to the struggles associated with that. I think going forward, as it relates to what has to happen for further price increases, we're at record prices right now. Mm-hmm. There is favorable supply-demand circumstances as it relates to the movement from foam to paperboard in the quick service food industry. Mm-hmm. But whether or not that just serves to stabilize what is a really good market and nice pricing right now, or increase prices, I guess, is to be determined.
Do you see any switching between bleach board and some of the other lower grades that we're seeing overseas, such as ivory board, or domestically bleach board and coated natural kraft or coated recycled board between those grades. Is there any switching at all that you're seeing from customers?
We're not seeing that right now, and I think, when we talk about, record pricing, one of the things you have to be cognizant of, if it gets up too high, that there might be more of an incentive to want to do some of that. So we might be more in kind of in a sweet spot as it relates to the pricing right now. There's always the fear of ivory board and what's happening with China. RISI was calling for the sky to fall down for a couple of years, and it hasn't. And I think that's, some to do with just, the quality issues, and then some to do, I think, while the high price of pulp hurts us on the tissue side, a lot of these China producers aren't integrated, and so they're having to buy pulp on the outside, and so that hurts them from the cost side.
Then, with moving on to the balance sheet, with your debt ratios near 2 times EBITDA, could you remind us where you're comfortable in terms of leverage? Also, what are your priorities on capital allocation? Do you see an opportunity to expand organically, either in bleach board or in tissue, or would you likely make further acquisitions going forward? Or are there so many cost reduction programs that you think that would keep you busy for the foreseeable future?
Well, so on capital allocation, actually, the first part of your question, we're comfortable between 2.5 to 4x EBITDA from a leverage standpoint.
Mm-hmm.
From a capital allocation standpoint, 2015 will be the third year of a 3-year commitment on our part to return 50% of discretionary free cash flow to shareholders. And so that'll be, as we look into 2015, our number one priority. As it relates to M&A, that's, as we sit here today, that's not number one on our list. That's not to say if something became available that, kind of fell out of the sky and was very interesting, that we, of course would look at it.
Okay. Then could you, the question du jour at this conference would definitely be MLPs. Could you update us on your MLP thinking? Do you think Clearwater has any opportunity to be, to partake in an MLP structure, especially on the bleach board side?
Yeah. I mean, it's something we're of course actively looking at it. We look at all things that have the potential to increase shareholder value. We've been talking with tax attorneys, tax accountants, investment bankers. We have not, like some of our peers, actually filed the request for a private letter ruling at this point in time. I think for us, as you look across the applicability of it to our business, paperboard definitely seems to look like it would work. Going to the other side of the spectrum, the converting assets within the tissue business probably wouldn't work.
Mm-hmm.
So the question is around the paper machine assets within the tissue side of the business, and whether they would work. And so we're spending some time really trying to understand that and whether or not that would work. I think that's one of the critical pieces for us to understand, both in terms of what a strategy might be going forward if you were to do an MLP, as well as whether or not we would have the scale for it to make sense, if it were just the paperboard assets, for example.
First of all, is there a case being made that there should be some, or there will be ultimate consolidation among private label tissue guys in the U.S.? You just, every month it seems like we get this incredibly long list of different players. And I guess sort of a related question, are you, do you feel like you have a confident, or you're confident in terms of knowing which of the projects that you see on some of the lists that are published, whether they're for real or not? Like, we're kind of intrigued by, for example, the St. Croix announcements, from essentially Indonesia, and whether, you have governors show up and all that, but whether they actually get built.
Yeah, okay, so the first part of your question, I think if you just look at the private label segment of the tissue industry in North America, you probably quickly say this is ripe for consolidation. And when you worry about some of the capacity adds and the number of players that are making that decision, I think when you kind of go down to the next level and you look at the individual pieces on the chessboard, and whether or not things make sense or whether they're actionable, I think each one has its own kind of wrinkle to it, whether it's a privately held, family-owned company or what have you. So it's not as though it's just, oh, it's obvious that these two players need to get together. So top down, it looks like it should be happening at the company by company level. There's, I think, a little bit more hair on it. The second part of your question was,
Chris, do you feel you have a pretty good handle on which of the announced projects are going to really happen and not happen?
well, so I've been with Clearwater in the industry for 2.5 years, and I've just in that short time period seen a lot of shift in what is going to happen when and whether it's going to happen. So in that short time frame, I guess I would have built some skepticism, and then I think when I talk to others who've been in the industry for a long time, that's typical. Our assumption is that everything's not going to happen when it was announced or whether it happens at all. I mean, to your question about the one up in Maine, that just doesn't seem like a real logical place to be putting a tissue machine when you think about transportation and other stuff.
Now, one other thing I wanted to ask is I remember back in the potlatch days, how, people would ask, is there any way, if it made sense for potlatch and therefore Clearwater now, to separate bleach board and tissue? You have, I think Lewiston, maybe both of those do both. And so you would have to condominiumize, I guess you could call it. And I've not seen a lot of that in this industry. I've seen a couple cases, but is that something that would be even feasible if it made, I would say, hypothetically, it made strategic sense for those two businesses to be separate?
Yeah, so I think, hypothetically, could you split it and could you, come up with an agreement that you could do it? Lewiston is the issue. That's where it's highly integrated. And that's where it would be the trickiest to split up. But theoretically, could it happen? Yeah. I think anecdotally, when Potlatch was looking to divest of these assets, I don't know that the spin-out was their first choice, and they were probably looking to sell. And there's not a very long list of customers who would be interested in both.
Yeah.
So you had people that were probably looking at one or the other, and nothing happened. So, anecdotally, I think there's probably some substance to the fact that splitting it up, especially with Lewiston, could be, not impossible but difficult task.
I guess just one more. When you look at your customers, the retailers, either how willing or how much do they want to get in bed with you all in terms of, let's say you do decide, okay, let's do a second machine at Shelby or whatever. Are you really just totally on your own, or do you, like we did the first one at Shelby, or when you think about the future, do you think you'll have some either definitive contracts, or is it just sort of an indication if you build it and you promise to show up, or how does that work?
Well, we're close enough to our customers that it wouldn't just be like, let's, have a wild hair and just build this and see what happens. And I think we would have a good indication of, what demand we had. When we built Shelby, we're very strong on the grocery side of the business. And there wasn't a bathroom, a Charmin quality bathroom tissue offering within our existing book of business, in particular grocery. So we felt pretty comfortable in discussions with our customers that there would be demand for that. As we move forward if we were to build the second one, whether it's, a large mass customer where we felt comfortable about incremental distribution centers or something like that, it'd be that kind of thing that would cause us to go, we feel like we have a high enough confidence level that we're going to be able to place all these incremental tons.
I think, going back to bleach board for a second, looking overseas, you definitely had a lot of talk a year or two ago about the ivory board, and you mentioned Reese, the sky is falling, but that definitely seems to have stabilized, most likely because of the pulp market. Do you think there's any opportunity to regain some of the tons that came back from overseas and put them back into the export market? Or, if pulp falls, do you ever see a scenario where ivory board shows up in the domestic market?
Well, I think whether, the battle between the global battle really between ivory board and SBS continues, and how successful ivory board is in that, I think is going to, first of all, to be dependent on how much incremental capacity comes out of China, as well as, you know, how it gets used up within China. And then I think where it's successful versus not as successful is going to be dependent on lots of things like, you know, transportation costs, product quality requirements. You know, as we sit here right now in the U.S., we see some, but it's not been anything that, you know, the doomsday scenario anybody talked about. And, you know, obviously something we continue to watch. And, you know, as we look in the near term, it's not something that we say this is the greatest risk to the SBS business right now here in the U.S.
But probably not. You probably are not going to see SBS move back into the markets where ivory board has already displaced it, if I'm hearing that correctly.
Well, I guess that scenario would be China's demand has grown into the capacity, and there becomes, I guess, more of an opportunity either in Europe or Asia for some of the exporters right now.
Okay.
But
and then coming back to tissue and some of that market, have you seen any impact from Procter's entrance into the adult incontinence market in tissue as well as nonwovens?
Haven't in tissue, no. I guess, and I haven't paid that much attention to the non-wovens.
Okay.
But yeah, from the tissue side, that hasn't been something that.
It's not been a needle mover.
Yeah.
And then, you know, you've talked about the large branded guys really, how should I say, coming. I don't know if it's discounting. What was the word that?
Promoting.
Promoting.
Yes.
Have you seen them actually move to discounting yet? Have you seen them actually move their pricing of their product, or is this still a strategy of just advertising heavier than they did before?
Well, yeah, we haven't seen actual price reductions on the shelf.
Okay.
So it's advertising with, you know, some money to the retailer. The net effect so it's like a temporary price reduction. The net effect is you end up, the consumer looks at Charmin on the shelf and it ends up being the same price as the private label.
Okay.
I had a question also about lease board. You know, we've talked a lot at a conference like this about container board and box plants, and it seems like most people in the lease board business don't really do a lot of converting. Maybe in the case of like IP cups and plates. Talk a little bit about are you forward integrated at all? Do you have any converting capability? And is there sort of an ideal, and how do you think about the converting part of the business?
So we don't have any converting, and that was, I think, a strategic decision that was made probably while we were under the Potlatch umbrella that has continued today. And thinking there is, you know, hey, a value proposition to our customers. We're one of the only ones that don't also compete with you. You know, as you move forward, and is that the right strategy going forward? I think obviously the folks who do have converting have a little bit better ability to control inventory through cycles, and whether that's something that you want to be able to do. But it's, you know, for us, it's not written in stone. Absolutely, we wouldn't have converting. It's something that we would think through every year.
And it always seems like, well, that more people agree with your strategy. It seems to me that people are if anything, de-emphasize converting if they're a wood producer. And I wonder, how does, you know, you talked about the Chinese situation, for example, you know, exporting lease board. Could you see it as being important to be a producer of other types of paperboard, whether it's beverage carrier board or the coated like cereal box board? Because it would seem like, you know, if all the converting guys are mostly independent, then they can sort of play the various substrates off against each other. And maybe I'm overstating that, but how do you guys think about that?
Well, I think you'll probably look at that one of two ways. One is would you diversify amongst grades to protect yourself that way, or would you get more forward integrated on the converting side to protect yourself that way?
Coming back to tissue real quick, it's when pulp was going up, it seems to have stabilized a little, but when pulp was going up, you definitely heard about de-sheeting. You're getting to the point where a roll of toilet paper is now 3 sheets, at least the standard size, and a roll.
Like the 3 potato chips you get out of the vending machine?
Yeah, pretty much, the empty bag. Are you continuing to see de-sheeting? Are private label rolls now becoming about the same size as the branded rolls? Because I know there was a time where the branded guys were de-sheeting, the private label guys, for some reasons or others, couldn't de-sheet, so we're at a cost disadvantage. And do you think we're at the end of the de-sheeting, that you can't really do it much more?
Yeah, I mean, that kind of started about a year ago, or maybe a little longer. I think that's pretty much worked itself through. I think anything incremental you see going forward now is where the consumer would actually probably see some value, as in a much more absorbent paper towel. Therefore, the paper towel roll is smaller, kind of thing.
But you're not seeing much more de-sheeting out of the big branded players in the last 3-6 months or so?
I would say within the last 3 months, no.
Okay.
Can you talk a little bit about your split between paper towels? I don't know if you're doing facial and toilet paper, and how which is the best position. My perception is that the paper towel area is the easiest to work with private label, but I might be wrong about that. So between toilet tissue, facial tissue, and paper towels, which is easier, and what's your mix?
Yeah, if you just look at the overall tissue total segment, bathroom tissue is the biggest piece of that, and then paper towel, if you throw that in, you've got about 85+% of, maybe even 90% of the total tissue segment, and then facial and napkins are the smaller pieces that make up the rest. If you look at our mix, it's probably pretty similar to that. I think when your comment about paper towels looking like it's kind of more of the sweet spot for private label, I think that came about largely because it looks that way, largely because we had a TAD equivalent paper towel product in the kind of early to mid 2000s, that kind of at the time paper towels were kind of the same lower product mix as bathroom tissue, and you could see over time as that TAD product was received and accepted that the paper towels came up from a mix standpoint. So now the opportunity, I think, with now us and others having the TAD capability within bathroom tissue, that you will see the bathroom tissue segment mix increase. And so if I look at it from an opportunity as I look forward, bathroom tissue, I think, is where the biggest opportunity is.
On that, 10, 15 years ago, Europe didn't look too much different than the U.S. does today. What really happened in Europe to make private label come up faster than what we've seen in the U.S. so far?
Well, and I'm not sure about the time that there was more in the way of consolidation by the retailers within Europe, but I think, as I understand, whereas the U.S. consumer identifies with a brand, not the store. The store is the box where you go to buy your brands. As I understand it, in Europe, it's more the consumer actually more identifies with the retailer itself, and that's where the loyalty is, and so that has facilitated the ability for them to grow the private label share.
Any more questions?
What is your thought about, maybe talk about your balance sheet, talk about cost of debt, and not that you would let the cost of debt, drive your strategy, but it seems like, people have said today and recently that it's almost like you're getting money thrown at you. And, what are your thoughts about that? Do you think, that could change your view toward leverage or toward M&A activity?
Yeah, we've refinanced 2 tranches of debt in the last 18 months. High yield, one was at 4.5%, and one was at 5 1/8. So that's pretty attractive. But like you said, that we're 10-year, yeah. But like you said, we wouldn't just go raise money to put it on the balance sheet. Like I said before, we're kind of sitting at 2.5x EBITDA leverage would be comfortable up to 4, so we have, I think, room. So, you know, if the right reason came up, we would feel very comfortable increasing our leverage to do something that made sense and would drive shareholder value.
You mentioned early on about some cost reduction programs, especially in tissue, to get your EBITDA margin up. Could you flesh those out a little bit? You know, tell us some examples of where you see some opportunities in your business.
Yeah, I guess I kind of break it into three places. The biggest opportunity is really around our supply chain.
Mm-hmm.
And a couple of projects we're pursuing, one of which I can talk about now, that kind of plays into the supply chain, is that if you look at our converting lines, and as they kind of got to where they are, they're kind of some cats and dogs in terms of they're not standardized across.
Mm-hmm.
And from a complexity standpoint, when we're planning where things are manufactured and shipped to what customer, that adds a tremendous amount of complexity because we have to be very careful about what we're doing where.
Mm-hmm.
And then that adds a lot of transportation cost because you might not be converting in the ideal place. But we have the ability to standardize that back end of the converting lines. Mm-hmm. That will take out the complexity from the planning standpoint and take out the transportation miles. And so that there's going to be significant savings there. We've got a couple other supply chain things that I'm not in a position to talk about now, but will be when we release our Q4 earnings. We also are looking hard at, we created a new, within the tissue business, a new group called the Specialty Tissue Group, which really these are some of the legacy mills that we got when we acquired Cellular Tissue that, they're kind of more on the fourth quartile spectrum from a cost perspective. And I think, when we acquired them, I think we just said, let's use the Clearwater playbook, layer that on top. And I think there's probably more cost that was put into those mills in that operation than, as we look at it now, is necessary. So really we're calling it running to cash to they're never going to be first quartile, but to maximize the profitability of those mills.
And then probably more on the bleach board side, but are you seeing any major impact from Boilermatic going forward? Do you have any work that you need to do regarding environmental stuff in the next 2-3 years?
Well, so it's not immediate, but we've got environmental people spending time on that and assessing what that all means. And I don't know how it all finally plays itself out, but there may be some CapEx associated with that.
I might be mistaken, but I think your first TAD machine was in Vegas.
Correct.
It was 30,000 tons.
Yes.
And then you built Shelby. Is there anything to learn about scale? Is the cost position, highly different in those two facilities from a scale perspective? I know there might be other factors. And does it make sense to build one that's smaller anymore?
Yeah, you'd always do a full width machine looking forward. I think there was when that decision was made, I think there was constraints on capital, and they did what they could do at that time. But in a perfect world, you'd have a full width machine, but just from the scale that you get from that.
And in terms of, I just want to be clear about this. I know the TAD machines, which I think TAD is a sort of Valmet product.
Well, it's Mezzo,
Mezzo, which
yeah,
is Val.
which is now Valmet. Yeah.
I know we started to hear about this in the early 90s when Procter & Kimberly built them. Was there a reason that you didn't see non-branded guys build them from was there some kind of a exclusive arrangement, and when did that come off?
Yeah, as I understand it, Procter had patents on that technology that began to expire in the early 2000s. So we were the first out of the gate with just the paper towel piece of it. Why it took between mid 2000s till now to see the bathroom tissue side of the equation addressed, I guess being new to the industry, I'm not entirely sure. I could speculate, but I think maybe it just the capital to go there, or maybe the lights hadn't gone on in terms of the private label tissue opportunity. I'm not sure.
The pension, there's definitely, being a newer company, you don't have that much of a pension headwind or anything, but with the actuarial tables changing just because people are living longer, are there any major pension changes that we should expect from Clearwater over the next few years?
No, but given our legacy under Potlatch, we're actually, if you think about it that way, not a new company.
Yeah.
So we do have fairly significant pension obligations. We're $7 million underfunded right now. So, between interest rates and changes in actuary tables, that thing's going to move. But where we're spending our time right now is asset liability matching and trying to get, there's no reason to be in 70% in equity. And if you can match your assets to your liabilities through upturns and downturns, you don't have some of the exposure. So that's where we're focusing there.
Anything else? Then I think I'll appreciate your time and thank you very much.
Thanks, James.
Have a great one.
All right.